By the end of this video, you guys are going to know exactly what it takes to become a full-time day trader in 2025, starting from a complete beginner. In this video, I'm going to walk you through 4 actionable steps that you guys can take today right after watching this video. The first actionable step in this video is going to be how to read charts and how the markets actually move. The second one in this video is going to be finding confluences to actually tell us where price is most likely trying to go. The third one is going to be on how to build a strategy around these confluences that I teach you guys. And lastly, the fourth one in this video is going to be forming a plan around your strategy and your personality. So before we start this video, who the fuck am I? My name is Johnny and I've been day trading for over 5 years now. I've traded the Forex markets, the futures markets, the crypto markets. I've even dabbled into some stocks and options whenever I first started day trading. And primarily now I've been focused on the futures markets for the last 2-3 years. And in those 2-3 years, I've been able to generate over $500,000 in prop firm payouts, which is absolutely insane. I've been mainly documenting my whole journey from all of these past years on TikTok and Instagram primarily, so you guys can have a look through on my Instagram highlights. I've been doing this for a very, very long time. And the last job I actually worked was back in 2020 of March when COVID started. So right before COVID actually hit the world really hard, that was the last time I worked a job, and I literally walked out of that job because I was making quite a bit of money with drop shipping, investing, and trading. And I've been full-time day trading ever since then. So with this year, if all goes well, I'll be able to hit $1 million in trading profits, and I'm documenting the entire process and this entire year on YouTube this year for you guys to watch. And I'll be able to finally retire my parents, my girlfriend, and my brothers from all working jobs. And I'm sure everybody watching this video has sort of a similar goal with this trading stuff or with even business. So if you're watching this video, again, we're going to be walking you through 4 actionable steps, taking you from complete beginner to full-time day trader in 2025. So enough of me yapping. I'm a straight to the point kind of guy. Let's get into the video here so I can actually show you the 4 actionable steps to take you from complete beginner to full-time day trader in 2025. All right, so I ended up making a presentation here for you guys because I feel like it's a lot more organized. That way it gets the points across even better. But nonetheless, let's get straight into this video here. So become a full-time trader in 2025. This is going to be a simple 4-step guide on how you can start your journey on becoming a full-time trader this year and no time later. And before I actually start this video, I just want to say that we're not going to go over all the little boring stuff like how to set up TradingView, how to set up your charts, your colors, what are candlesticks, because I already have videos on all of these topics in my trading academy that I actually did a few months ago last year. So if you guys want to go watch those videos, if you guys are complete beginners, like complete beginners, no trading knowledge whatsoever, go to the Trading Academy, watch those first couple videos so that way you guys get a feel of it, and then come back to this video here. It should only take you about 30 minutes to an hour to complete some of those first videos in the Trading Academy starting at episode 1. Again, if you guys don't know anything about like setting up charts, what are candlesticks and all that, go watch those videos because I already have videos on all of those topics in the Trading Academy that I did. And I will link the playlist somewhere on the screen here, if not in the description. So let's get started. So the video overview, and like I said at the beginning of this video, is we're going to go through 4 actionable steps. The first one is how to read charts and how the markets move. The second one is finding confluence. The third one is building a strategy. And the fourth one is forming a plan around that strategy, okay? So the first one, the overview, is going to be just walking you through how the markets actually move and why the masses or the retail masses are actually wrong with their support and resistance, BS zones, all that goofy stuff that we are not going to try and put you on that path, okay? We're going to put you on the actual correct path and show you how these markets actually move. The second thing is finding confluences, right? Identifying certain confluences in price action, which can help you determine where the market is wanting to go, which I will show you what to look for in this video. After that, we're going to be getting into building a strategy, right? I'm going to be giving you a cookie cutter strategy with the knowledge provided in this video, so you're able to start practicing this strategy right after this video. So as soon as you're done with this video, you're able to implement this in the live markets and start practicing. And the last step of this video, we're going to be forming a plan around that strategy, okay? I'm going to be walking you through and giving you examples of how to form a plan around that trading strategy and your personality, which is the most important. My goal for this video is to give you enough knowledge and actionable steps to actually start your journey on becoming a full-time day trader this year. All right, and no later, like I said. So let's move on to the next thing. So first and foremost is reading the charts and how the markets actually move. So the first thing you guys want to learn and know about is liquidity, okay? Because this is how the markets move. The market makers, smart money, these big institutions, they want to go and stop people out. think of it like fuel for the market, right? That's all liquidity is. And where you can find liquidity is going to be at these swing highs, right? The highest point in these charts, which I have marked out in circles, and the lowest points in these charts, okay? So the basic idea or the general idea of liquidity is that these market makers, these big institutions, smart money, they're trying to stop these traders out. They're trying to get them out of their profitable positions and reverse the market, right? They're trying to pretty much trap any retail people thinking that this is a support zone right here. They're trying to trap the people trying to sell when this is breaking down, okay? So you see how the price action here dips below these two low points right here. And you see how the market ends up reversing and never makes a new low below these two low points or below this low that broke through these lows right here. So the idea is that retail, they're looking at this area right here as a support zone. Okay, so they're trying to buy the breakout right here. So if this is going to flip from a support zone to a resistance zone, they're trying to short it, which means that they're making money when the market goes down. So the market, the retail masses, they're trying to short this when it's sweeping these lows right here. But smart money is actually accumulating long positions, meaning they make money when the market goes up. Okay, so they're distributing their orders under here, taking out these profitable positions here. So these are stop orders, okay? So anybody who's in profitable positions right here, they have their stops under these lows. And smart money is coming to manipulate under those lows. They grab those orders, then they start accumulating to the opposing side. They start accumulating long orders, right, to take it up to the opposing side, which is exactly what they do right here. Okay, so they work their way down, they attack these lows, and then they bring it right back up to this high here. And it's the same story over here at these buy side levels over here, right? So this swing high right here ends up sweeping, right, relative equal highs, because this high is relative to this high here. Okay, so that is a nice buy side liquidity pool. Okay, there's a lot of stop orders right here. So a lot of traders that are in profitable positions up here, they will have their stop orders above these highs. So all you need to know for buy side and sell side liquidity is there are going to be swing highs and swing lows. That is where you can find the buy side and sell side liquidity. And again, it's the same story here. The market makers push it up. Retail is trying to buy the breakout. They see a closure above these highs here, which they used to call a resistance zone. So they're thinking it's going to flip to a support, right? But nonetheless, smart money accumulates their short orders and slams it all the way back down, trapping retail up here in long positions. So retail is trying to buy the breakout. Smart money is actually reversing it on them, and they slam it all the way back down. They take out this low here. They send it higher. Then they move it lower to take out these nice little relative equal lows right here, which there is a bunch of stop orders here. They accumulate long positions. Retail, they're trying to buy the breakout. They're trying to short the breakout here. Smart money reverses it right back up, and they send it all the way back up to this high point here where retail is trapped in their longs, right? So they're underwater. They're losing money as the market goes down. Same thing over here. Sweep, we push up, we take out the highs, we come down. Boom, push up, we sweep highs, we go down. Okay, this is how the markets actually move. Okay, think of it again as fuel for the market. They're grabbing orders, they're knocking traders out, and they're sending it to the opposing side. Okay, buy side and sell side liquidity, again, refers to areas in the market where a high concentration of pending orders exist. These are the key liquidity zones where smart money, institutions, banks, and large traders hunt for liquidity to fill their orders. All right, very, very simple idea, but this is how the markets actually move. So finding confluences. So the first thing we're going to talk about are fair value gaps or imbalances, right? A lot of people like to call them imbalances, fair value gaps. It's the same thing, just a different name. So the fair value gap and how you guys can find the fair value gap or these imbalances are going to be this 3 candle sort of pattern here. Okay, so the bearish fair value gap, it's going to be the lowest point of the first candle in this 3 candle pattern, and there's going to be a gap, so there's not going to be any overlapped wicks, right? So it's going to be the lowest point of the first candle and the highest point of the third candle. So from there to there, this gap here, you drag a box or a line from the lowest point of this first candle to the highest point of the third candle. That is going to be your fair value gap. So what happens here and why these fair value gaps and imbalances form is because large institutions are actually trying to move the market super quick. So when these gaps form, it's usually a spike in price action. There's displacement in the marketplace. This shows you that large traders, banks, institutions, whoever smart money is, are distributing orders in a very fast-paced manner. So they're displacing towards something. They're impulsive, right? It's very quick, right? You get a spike in price action, and when price is really trying to move, you'll get these imbalances formed. This fair value gap is pretty much a reference point for smart money to bring it back up, fill their orders, and then send it lower. Okay, fair value gap can be used for a continuation entry. Okay, this is a good confluence for continuation. So if you're following the trend, right? Let's say you're following a bearish trend. You can pretty much get into one of these imbalances and expect lower, right? Expect continuation. Same thing for a bullish fair value gap. It's going to be the highest point of the first wick and the lowest point of the third wick in this 3-candle pattern. Again, smart money will use this as a reference point to fill their orders because there is a spike in price action, there's displacement, and when the market is moving again, these gaps are going to form, and smart money will refer back down to these gaps to continue the move higher. Okay, that is the first confluence there. So the second confluence here is going to be a break of structure, a BOS, or other people like to call it MSS, which is a market structure shift. Now, I didn't realize it till now, but I did mark the wrong one, okay? So the break of structure actually is going to come down here. And the reason for that is because this little swing high here produced this new low under this low. So we made a lower low. So as soon as we break above this high here that produced this new low, that is going to be your break of structure. Now, when smart money is active, again, they will start pushing price quickly, right? They're going to start pushing price very fast. And this is where these imbalances are going to be formed. So we break the structure, we form an imbalance above this high here. You can see how smart money sends it higher. We create nice equal highs. So there are a bunch of orders above these highs. It's a nice buy side liquidity pool, right? You can see how smart money comes back down for a reference point here in this imbalance. They use it because they're grabbing orders because price moved really, really quick. So they couldn't fill their orders here. And again, they used it right here as well. But they come down and they sweep those stops out. They accumulate long orders here to continue the trend all the way up to here. And then they end up taking these highs out right there. So you're probably asking, okay, what's the break of structure? Why is it important, right, as a confluence? Well, the break of structure, once we start switching trends like this, once we make a lower low and once we make a higher high, this breaks the trend. So this has a potential to reverse and switch trend. So that's why break of structure is very important to know. And that's why it is the second confluence in this video. Third confluence in this video is going to be premium and discount. And in this example here, I have an example of discount. So from this displacement range, right, from where we started retracing to reverse the trend, so where we broke the structure right here, we want to measure from where price starts retracing back down to the fair value gap. We want to measure from the low to the high point where the price reversed and where the price started retracing. This is going to give us a equilibrium, which we are going to use to find out where our premium of the market is and our discount of the market is. So you can see here, this 0.5 is considered equilibrium. So anything above the 0.5 is premium of this range here. So we do not want to long in this fair value gap here because it is in a premium of this range right here that broke structure and where it started retracing. So once we start pulling back, we don't want to long in here because this is a premium fair value gap. Think of it like this. If you're wanting to buy, you want to buy in a discount of your range. If these candlesticks are your products, you want to buy in discount, right? You don't want to buy in premium. Think of it like your favorite shoes. Would you rather buy your favorite shoes in a discount or when it's marked up super taxed, right? Think of it like that. Your candles are your products and you do not want to buy in a premium. Same thing if you're wanting to sell, right? Making money when the market goes down. You're wanting to sell in a premium. If you want to sell, you know, whatever product online or in your local area, you want to sell for the most amount of money, right? You want to sell at a premium, okay? Think of the candlesticks like your product, right? It's just like a business. So if you're wanting to buy, you want to buy in a discount of your range, okay? So we get the break of structure, we push up, we form nice equal highs here, right? Very nice liquidity pool. So this means that smart money will want to take these highs out, right? They'll want to attack those and grab the orders, okay? So it's a very nice draw on liquidity, right? Because price is drawing up to this high. We formed equal highs. We start retracing down into the fair value gap where smart money left orders open. We start coming back into this fair value gap here. Again, think of it like a reference point because we're grabbing those orders that smart money left. So we drop below the equilibrium in this fair value gap. Now, if you guys already guessed it, this is a discounted fair value gap, right? What's the difference between this fair value gap up here? It is in a premium. This fair value gap is in a discount of this little range right here from this low to this high here where we start retracing. Okay, this fair value gap is in a discount. This little minor sell side here gets swept. We take out these stops here from anybody that is long. Smart money starts accumulating more long orders to take it up to this nice buy side pool right here at these equal highs. We buy under discount. We join in with smart money and we take it all the way up to these nice equal highs. All right, so still sticking on premium and discount. This time it's going to be an example of a premium range. So we're looking for sells, which means making money when the market goes down, right? So you can see here from the point where we start dropping lower, the highest point here, this point right here where we, drop lower, to the point where we start retracing higher up into this fair value gap. If you notice, this is the only fair value gap within this range right here. And it just so happens that price reverses right when we hit the equilibrium of this range. So again, anything above equilibrium, right, is premium of this range. Ideally, you want to sell in a premium if you're looking for shorts. So you can see price refers back up to premium, actually peaks above equilibrium here, and it tags a premium range of this fair value gap here, and it absolutely drops all the way down into these nice relative equal lows over here to the left. So smart money is stopping anybody out that is in profitable positions, in profitable long positions, that is right here. They're stopping them out, and then this could be a potential area where they want to reverse. But you can see in this case, we push up, we drop lower, we break structure, we come back up. This is a reference point for smart money to continue this lower. And then we want to join in with smart money here. So tag the equilibrium, tag the premium end of this fair value gap here. We drop all the way down to these nice relative equal lows right here, which again are swing lows, okay? Now, building the strategy with all of the knowledge that you've acquired in this video so far. So the first step of this strategy here is a sweep on liquidity, as you guys can see up here. Boom, sweep of liquidity, right? We got that. We take out these stops right here. We swept liquidity. So next we want a break of structure. So the break of structure is going to happen right here at this low, but you can see how this low and that low are relative to this low, meaning that these lows are in the same area and they're very close to each other. So we get the break of structure here. We close below, that confirms the break of structure. You don't want to see a wick, right? You don't want to see a big wick like this under here. We want to see a nice body closure. We want to wait for that candle to actually close, okay? So retest the fair value gap in imbalance, okay? We want to make sure that the fair value gap or that imbalance is in a premium of the range if we're wanting to sell. If we're wanting to long, we want to make sure it's in a discount of whatever range that we are dealing in. So for example, this is the high point when price started dropping lower and breaking structure, and this is the lowest point where price started retracing up. And you can see how this fair value gap here respects and we drop lower. Now you can see how this fair value gap here doesn't, because it's in a discount of this range where price starts retracing back up. Okay, so this is our range. So once you start seeing that price is starting to push up, we can start marking our Fibonacci from the highest point to the lowest point all the way back up. It tags the premium fair value gap, aka the imbalance. This is where we want to join in with smart money to go lower down into this swing low here, right? Again, make sure it is in a premium if you want to sell, or in a discount if you want to buy. You want to take profit at the next swing low or high, right? That sell side or buy side. So for example, here, you could actually have a take profit right here at this low, right? At the low end of this range, right? When we start retracing. So if you got in anywhere right here, you'd want to take profit as soon as it sweeps this low here. And then you can see it drops even lower. It takes a little bit to get there, but it ends up getting there right there. All right. This is the strategy that we want to follow here, and this is the strategy that I'm going to be giving you here in this video. So forming a plan around this strategy. Okay, so this is going to be the trading plan for this strategy. And if you want to take this strategy and start implementing it in the live markets or in your backtesting, follow this plan for this strategy to a T. Be very disciplined about it, because all strategies work. It is just the operator. So the operator is in charge of how that strategy is going to work. Again, all strategies work, but it is up to the operator on how he operates that strategy. So I'm giving you guys a cookie cutter trading plan for this strategy for live markets or backtesting. Make sure you guys follow this strategy to a T. Come back to this video and let me know how it works out for you. So watch for this model or strategy to form during 8 a.m. to 11 a.m. Eastern Standard Time. Or if you can't find anything in there, look for at 1:30 to 4 p.m. Eastern Standard Time. Always make sure that the fair value gap is in premium if you want to sell, or in discount if you want to long. This is going to be 2 trades per day model. If you win the first one, just stop for the day, close out the charts, and be content. Always have a clear draw on liquidity, meaning that you need to have a clear target on where you're trying to take price, because again, we want to trade with smart money. We don't want to trade with retail, right? We want to go against the retail logic. So we want to attack swing lows and swing highs, okay? We don't want to try and buy near these swing lows or swing highs, okay? We want to actually attack those swing lows and swing highs. And that's pretty much it. And this works on every single time frame. This works on the 1 minute, the 5 minute, the 15 minute, the 1 hour, 30 minute, daily, 45 minute. It works on literally all time frames. I would ideally stick to the 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, and monthly. So just jumping onto the charts here so I could actually show you some examples here. So you can see how we have a sweep on liquidity right here at these nice relative equal highs right here. So nice sweep on liquidity right there. And if we take out our Fibonacci from this high point to this low point, and this is on the 1 minute chart, you can see how price retraces back up into this bearish fair value gap right here, after breaking structure right here, pretty much retesting where it broke structure here in this fair value gap. But if you can see right here, it is above the equilibrium. This is the premium side. Anything above equilibrium, remember, is a premium. So this is the premium end of this little fair value gap right here that it retraces into. So this is completely valid. Then we have a clear draw on liquidity at the Asia session low right here. So you can see it ends up actually sweeping out those lows, and then it uses another fair value gap to continue a bit lower. So you can see how this works out perfectly here from this premium end of this range after the break of structure and sweep on liquidity. We tap into that premium end of that fair value gap, and it draws lower into this sell side level here, takes it out, and that's where you would be done for the day. And it was between the hours of 8 a.m. and 11 a.m. EST time. Let's go look at a bullish example really quick. All right, so here is a bullish example. So we end up getting a nice drop lower and we end up pushing up. We swept liquidity there and we ended up sweeping liquidity all the way over here to the left. And then we end up pushing really hard to the upside, forming a massive fair value gap or imbalance here. We end up breaking structure to the upside and price starts retracing down into the discounted range of this fair value gap. Anything below equilibrium, again, is discount, and this ginormous fair value gap here ends up tagging the discount end of this fair value gap here. And I mean, you can see how price refers back to it one more time before absolutely pushing really high up. So you can see how that works out here. And this push up here from the middle of this fair value gap happened between the hours of 1:30 to 4 p.m. But that is pretty much going to be the video here, guys. Those are going to be the 4 actionable steps that you guys can take this year to become a full-time day trader this year. Now, I know you guys probably have questions on fair value gaps. You guys probably have questions on break of structure. You guys have questions on premium and discount. You guys have questions on the model, the plan, all of that stuff. Like, this is literally just the start. If you're watching this and you're a complete beginner, but you have some sort of trading knowledge, you guys know that this is a start, because I haven't even covered all the more advanced stuff. And this video would be a whole week long if we had to cover literally everything that I have in this screenshot. It's literally like an iceberg, okay? So this is what you learned in this video, just the tip of the iceberg. We still have to cover breaker blocks, order blocks, rejection blocks, SMT diagram, literally all the stuff that you're seeing here on the screen right now. I'm not saying this to overwhelm you. I'm not saying this to scare you, but you want to take it one step at a time. So if you're a complete beginner, please start with these 4 actionable steps and use it and get used to it. And then after that, come back and watch all of my other content. I literally have videos on every single one of these topics here. But if you guys want to fast track and speed run your success to profitability this year, I have officially launched my one-on-one personal mentorship. First off, you guys are going to be getting an A to Z 10-week trading program. This is a trading program where it breaks down the basics, all the very advanced level stuff in a graduate program setting. On top of that, you guys are going to be getting daily assignments after every single video. If you guys do not understand anything or something in those videos or the homework assignments, you guys can directly ask me in the Discord community. You guys are going to be getting lifetime access to me and the Discord community. You guys are going to be getting a trading psychology coach and a best-selling author. Now, I cannot say his name due to NDA reasons, but we have a trading psychology coach and a best-selling author in the trading niche, right, that has wrote a very successful psychology trading book. We're going to be doing about 2 sessions every single month with him so he can break down your psychological barriers or whatever psychological problems you may be having, which is very important, because a lot of traders deal with psychology problems. And a lot of other mentors are not really qualified to give psychology advice. Yes, they can give advice on what worked for them, but an exclusive trading psychology coach, that's something. Not a lot of mentors offer that in their mentorships, and I'm offering it to you guys. On top of all that, you guys are going to be required to submit a report card, so that way we can track your guys' progression. You guys are going to get a habit tracker and trading journal that tracks all of your habits and your trades, so that way I can personally give you feedback on your trades and monitor your habits, so that way we know that you are disciplined and serious about actually improving your life and your trading. Again, I am personally going to be reviewing every single one of you guys' trades, giving my feedback on those trades, so that way we can optimize what's working and cut out what's not. This is literally a business, so we want to treat it as such. This mentorship is built on discipline. This mentorship is built on accountability. And this mentorship is built on guidance. So if you're not a serious person who is looking for a mentor, who's looking for guidance, who's looking for accountability, who's looking to improve their discipline, please do not book a call with my team and I down below. But if you are a serious person who's looking to improve their trading, who's trying to find a mentorship community that actually fucking cares about their students, where you can actually talk to your mentor and not just pay money and there you go, you can't talk to anybody. No, you will have direct access to me at all time with whatever questions, whatever experience that you guys are in your trading journey. We have coaches as well for any level of experience. If you guys do not know any of these things on the screen right now, perfectly fine. The A to Z 10-week program breaks down every single one of these concepts here with daily assignments, so that way we can track your progression and your understanding of these concepts here. Doesn't matter what level of experience you are as a trader. If you're just somebody who's serious about actually improving your trading, improving your life, and actually, again, finding a mentorship that actually cares about their students, there will be a link down below to book a call with my team and I. So once you guys book a call with my team and I, we're going to be interviewing you guys, seeing if you qualify for the mentorship. And if you do, then I will see you on the other side. So I hope you guys enjoyed this video, and I will catch you guys in the next one.